So
Where
in our in our global allocation, we're overweight on the U.S. Still, we still think some of those sort of tailwinds that were propelling U.S. exceptionalism are still there, at least over the near term. We want to get past the inauguration day. But Europe is sort of our favorite diversifier in the cyclical rest of world space. And one of the reasons for that is that I think we maybe are moving past what was peak bearishness on Europe. Something that we were seeing even just a quarter ago were basically recessionary levels of downward earnings revisions. So earnings momentum was going very much in the wrong direction. But now we've seen that stabilize and actually sort of like flatline. And as we head into this earnings season, it's not that expectations are super elevated. Europe just needs to do okay to see pretty good price action. And I think that's what we're seeing in places today.
It's just the level of expectation,
Yes.
I guess. It just needs to do okay.
Yes.
Well, I also noticed that in one of your recent notes, you actually believe that there's an implying 10% upside for the Stoxx 600. I would like to get a little bit more color, really, in terms of what sectors do you think will actually see the strongest gains? Talk to us about that.
Yeah, sure. Yeah, so exactly. So we're forecasting about 10% upside, and I think that's on pretty conservative assumptions, which is that valuations stay flattish to maybe come up a little bit, and that you get sort of below consensus earnings growth of around 5% over the course of 2025, and that accounts for some of the risks from tariffs and the like. Within the market, what we like are some of these more beaten down cyclical sectors that are out there. So we like consumer products, Lux Goods. We like tech as well. We recently upgraded basic resources. So we're kind of playing the European story via the cyclical markets more specifically, and we think that's where there's potential upside this year.
Given that you mentioned luxury there, I just would like a quick reaction really to the numbers from Richemont. Of course, very strong earnings today. Do you think that is actually telling us a broader picture for the outlook for some of the European luxury names?
Yeah, it might just be sort of indicative of this broader story on Europe, which is that Lux Goods has been in the midst of an earnings recession last year. We saw huge downgrades to earnings forecasts, and what that's done is just reset expectations on a lot of these stocks. So the valuation setup looks more attractive going forward. So you get some of these upside surprises, and there's potential for big moves, and I think that's certainly what we're seeing today.
David,